Welcome to the first California statewide market update for 2025. And let me just tell you off the bat, what's crazy about the most recent data is just how strikingly the top 20% of the California housing market in terms of price point skews the entire data set. And we're going to see that clearly laid out in today's California statewide market update. I'm Jon Schwartz, California's 1% homebuyer agent. In 2024, I saved my clients $180,000 in agent fees. In 2025, I'm saving my clients $1 million in agents fees. Learn how you can be a part of it and schedule time to chat at jonsch.com. That's JONSCH.com. Now let's get into the data. And we're looking at the most recent monthly print from the California Association of Realtors. This is the California Housing Market Update. And starting with the statewide market overview, we see that sales are up 19.8% year over year to an annualized rate of sales of 268,180. That's not the number of homes that sold last month. That's the annualized number of homes sold expected based on last month's numbers. And this is a big jump over last year, 19.8%. It shows that buyers are coming back in California. Of course, the question is, to what extent are they coming back? To answer that question, we take a look at our next slide. And now we're looking at the annualized rate of home sales in California going all the way back to January 2005. The headline being sales ended the year solidly, marking first annual improvement in 3 years. What that really means is home sales in California have been tanking for 3 years, and now we're finally headed back in the right direction. But if you will look closely, you'll see that sales are almost 20% higher than they were December of 2023, which is the lowest point on this entire chart. Actually, looking more closely, we may have had fewer sales in May of 2020. That, of course, was the month that the pandemic hit America, that Tom Hanks got COVID in Australia, and everything abruptly shut down. That's about how low sales were 1 year ago. That's why this 20% growth in sales is really, it's welcome. It's great that we're growing back, but it's also not at all excessive. Right now, again, we're at this 268,000 mark. And typically in a normal year, in our pre-pandemic years, we sold about 400,000 homes per year in the state of California. All right, let's go back to our statewide summary. Now let's look at median price growth. The median sales price of a home in California is now $861,020. That's up 5% from this time a year ago. Let's take a look at this number in slightly more context too. Now we're looking at the median price of a home in California, again going back to January 2005. The headline, California median home price grew for the 18th month in a row, but that's actually only looking at year over year gains. Prices have not actually consistently grown for the past 18 months. Only the year over year change has been positive for the past 18 months. In fact, some of you might notice that where we are right now at $861,000 is less than we were at the big peak in 2022. And this, of course, would reinforce the argument that if you bought at the peak, you're a schmuck because home prices are still beneath that peak. Of course, you're comparing December to May, which really isn't fair at all. There's an annual cycle to the housing market. Prices always come down in the winter. So really you have to compare May of 2022 to May of 2024. In May of 2022, the median price of a home in California was $893,200. And in May of 2024, the median price of a home in California was $908,040. So to anyone who feels like they overpaid when they bought at the top of the market in 2022, don't worry, only 2 years later, the market is already beating the previous peak. All right, and the unsold inventory index, this is the months of inventory that are currently available on the California market, is up to 2.7 months. That's 3.8% over last year. I wouldn't say that's marginal growth, but it's not significant growth. And looking at median days on market, we're sitting at 31 days. That's up, again, almost 20% from last year. That is pretty significant growth. So compared to last year, we have a market with a lot more activity, a lot more sales, but also it's a much slower market. Now, again, we're not anywhere close to pre-pandemic levels, but this is a healthier market. More sales, more transactions, but also more time for buyers to find the homes they want. Let's take a look at how this breaks down regionally. We start with Southern California, and as you can see, there are quite a few formatting errors on, maybe that's in the right place, but that line's in the wrong place. Formatting errors in this chart. Let me help us read through these. The year-over-year growth in sales is 16.3%. In Southern California, the median home price is $950,000. That represents a 7.6% year-over-year growth. That's great. Unsold inventory is at 2.8 months, just slightly above the statewide average. Median days on market is 31.5 days, just slightly above the statewide average. And sale price to list price ratio is 98.9, meaning that homes are selling just slightly below list prices. Moving up to the Central Coast, existing home sales are up 20.5% year over year, just beating out the statewide average. The median price of a home is $995,000. That's up just 1.6% from last year, hardly any change at all. Unsold inventory is at 2.9 months. Median days on market is exactly where the state is at 31 days. And the sale to list price ratio is even better for buyers at 97.8%. In the Central Valley, existing home sales are up 15.1% over last year. The median price of a home is $492,000. That's up 6.5% over last year. Unsold inventory is right at the statewide average of 2.7 days. Median days on market is a little bit faster than the state as a whole at 29 days. And the sale price to list price ratio is 98.7%. Now in the Central Valley, existing home sales are up 15.1% year over year. The median sale price of a home is $492,000. That's up 6.5% year over year. The unsold inventory index is at 2.7 months, median days on market 29 days, and the sale price to list price ratio 98.7. Now we get to the Bay Area, which is far and away the hottest market in California right now. Scorchingly hot, incredibly competitive. The clients I'm working with in the Bay Area, the hoops that home buyers have to jump through, the contingencies they have to remove. It is a painful experience to buy a house in the Bay Area right now. Existing sales are up 14.6% year over year. The median price of a home in the Bay Area is $1.2 million, up a modest 1.5% year over year. Unsold inventory index is 1.6 months. That's no inventory at all. Median days on market is 26 days, and the sale price to list price ratio is 100%. This is the only region in California where the sale price to list price ratio is 100% or more. In every other region, homes are selling for less than list price. And on the flip side, we now have the far north region of California. This is the weakest region in the state. Existing home sales are only up 6.3%. The median price of a home is $369. That's up just 1.4% from last year. The unsold inventory index is a whopping 4.4 months. Median days on market an extremely slow 42 days, and the sale price to list price ratio an extremely low 96.4. If you live in the far north region of California, now is a good time to get into the market. Of course, we have to keep in mind that the far north only makes up 2% of the California housing market. The bulk of the California housing market is in Southern California. That's 47% of the market this past month. The San Francisco Bay Area makes up the third largest region at 19%. The second largest region is the Central Valley at 22%. The Central Coast is 4%, and then all the other counties are just 6%. Popping now over to inventory metrics, we have total active listings grew above the level observed the last 4 years. I love the way this chart is laid out. We have at the bottom months, January, February, March, all the way to December, and the different colored bars are the different years, starting pre-pandemic in 2018 and coming all the way to 2024. Now looking specifically at this month, we see that we have more inventory right now than the past 1, 2, 3, 4 years, but we are still well below the pre-pandemic levels of 2019 and 2018. And what I really appreciate looking at this graph is if you look in between this year and last, you can kind of see a lot of low bars. You know, you have the two tall bars before the pandemic, and then mostly pretty low bars until now. But when you try to isolate the red line, that's 2024, you see this nice growth that doesn't recede quite as low as the low bars between now and the pandemic. So inventory is coming back, but very, very slowly. Now we have the same data, but presented in a different way. The headline active listings followed seasonal patterns. Here we have total active listings in California, again from 2018 to December 2024, but obviously each line is its own month. And as you can see, inventory goes up and comes down, up and down, up and down. This is the annual cycle of inventory in California. Here's what I notice. 2023, when we reached inventory levels that were getting kind of closer to where they used to be, this was the year when interest rates doubled. What caused inventory to get so high in the summer was interest rates doubling from 3.5% to 7%. Now, if we look at 2024, we can see that we got to that same level that we hit in 2022, but there was no mortgage rate shock. 2024 was ostensibly a pretty normal year. So the fact that we got some significant inventory gain in the summer without having to have some sort of external shock to the system suggests to me that 2025 is going to look even more like these pre-pandemic years. Hopefully we get inventory levels up to, say, 50,000, which would be around here. That'd be fantastic to see 50,000 active listings on the California market this summer. All right, jumping back into sales data. Sales growth is strong in the mid to top end of the market. Looking first at this chart to our left, we see the growth in sales divided up into different price points. And as you can see, the price point that grew the most, 38% growth in sales, was the $2 million and more price range. Looking over our other shoulder at the share of the market by price segment, we see that the $1 million and more segment grew from 29% of the market to 32% of the market. $500,000 to $1 million, that segment of the market grew from 43% of the market to 44%, and $500,000 and under homes as a segment of the market actually shrunk from 28% to 24%. That's comparing last December to this December. And going back to year over year change, we see this shrinkage. Homes under $300,000, they shrunk in terms of sales numbers by 13%, and homes $300,000 to $500,000 also shrunk in terms of the number of homes sold by 7%. So when we say that home sales picked up 20%, we're definitely not saying that 20% more people became able to buy homes. Quite the opposite. It means that there's a lot more activity at the high end at the cost of less activity at the very low end. This chart shows the same data going back to December 2023. It breaks the California market up into price segments. I first want to draw your attention to the purple lines. That's the $2 million and more price segment. And as you can see, these purple lines are just miles ahead of other segments most months, not every month. The beginning of this year, we had a real problem where very high-end home sales were ballooning and middle-of-the-road home sales were barely keeping up. We saw some compression amongst the segments in the summer, which felt good. It was good that extremely high-end homes weren't beating out the rest of the market. And now we're in a situation where the highest price segment is pretty far ahead of the other price segments, but they are catching up. And this graph is really fascinating. It breaks down median price growth by percentile. So 0 to 20 represents the 20% least expensive homes on the market, and 80 to 100 represents the 20% most expensive homes on the market. Now check this out. From 0 to 80%, so this is the lesser expensive 80% of the market, the average median home price gain was 2.75%. And of course, the top 20% of homes by sale price, their median price grew by 11.6%. And remember, statewide, median price of a home went up by 5%. So what this graph is telling us is that 5% home price growth that California experienced over the past 12 months is not uniform across all homes. Very expensive homes grew more than double that amount. And the 80% of homes in California, the 80% lesser expensive homes, grew barely half that amount. And of course, when you break down the 80th to 100th percentile, you see that the top 5% of homes in California, the 96th to 100 percentile of homes in California by price, grew by 17.5%. The median price within that category grew by 17.5%. So what we're seeing is a lot of activity at the higher end of the market and a lot of price growth at the higher end of the market. Much less activity and much less price growth, not just at the bottom of the market, but at the middle of the market and all the way up to the 80th percentile of home price. And this graph really throws another curveball our way when we separate the California market by price segment. This is the sale price to list price ratio by percentile. So we're looking at the same percentiles, the 20% least expensive homes in the California market, the 20% most expensive homes in the California market. And what you can see is the 80% lesser expensive homes in the California market all had a 100% sale to list price ratio, and only the top 20% of homes for sale in California had a lower sale to list ratio of 98.5%. So even though every region except the San Francisco Bay Area had a sale price to list price ratio below 100%, you're only experiencing that in the top 20% of the market in each region of California. So unless you're buying a home in the 80th percentile of price or higher, you're actually seeing a 100% sale to list ratio. You're not able to buy below list price. And of course, the lowest sale to list ratio is when you get all the way to the top 5% of California homes by price, the 96th to 100th percentile, where you have a sale to list ratio of 96.6%. So here's one fine point that's really interesting to me. The median sale price of the top 20% of homes in California is growing the most, but also the sale to list ratio is lowest in that top 20%. What that means is these homes are selling for more money, but they're being listed for even more money than that. Agents and sellers at the very high end of the market are seeing how much activity there is, and they are shooting their prices to the limit. They're raising prices so much that even though there's much more activity at this end of the market, buyers are saying, slow down. We cannot keep up with these prices. We have to force these prices down. And that's why you get this sale to list ratio of 98.5%. This is another metric I love to track. It really demonstrates the gap between the high end of the market and the low end of the market, and also how incredibly that gap has been exacerbated since the pandemic started. The title here, Share of $1 Million Home Sales, well above its affordable counterpart for 11 months in a row. Now look, pre-pandemic, and fortunately we have this line that shows us where the pandemic struck. Let me clean that up. Homes of sales under $500,000 accounted for almost 50% of home sales in California. And home sales in the $1 million and up price range accounted for less than 20% of home sales in California. The pandemic completely flipped that, and sales of very low-end homes dropped, sales of high-end homes climbed, and since then, under $500,000 homes and $1 million plus homes have been seesawing back and forth around the 30% mark. Now, at present, $1 million and up homes account for 32% of the market, and that number is declining, and $500,000 and under homes make up 24% of the market, and that number is increasing. The question, of course, is, will the low end of the market again take up more market share than the high end of the market? And what will the new equilibrium look like? I can guarantee you, just based on inflation, that this equilibrium will never be seen again. For my money, the big question is, over the next 12, 24 months, will California be selling more homes that cost less than $500,000 or more homes that cost more than $1 million? If you have an opinion, let me know in the comments. Another fun metric to track, the share of homes sold above asking price fell to a 22-month low. The recent high point was in April 2022, when 72.9% of homes sold above asking price. Right now we're at 33%. A year ago this month we were at 34.3%, so it's a slight decline from the same month last year. And this is a 22-month low, meaning it was 22 months ago, that's around here somewhere, when we last saw such a small percentage of homes selling above asking price. Looking at homes sold above asking price by county, we see that in only 4 counties, there's the number 4, did more than half of the homes sell above asking price. That means that in 54 counties, more homes than not sold below asking price. And of course, the county where the most homes sold above asking price, no surprise, San Francisco County, where about 73% of homes sell above list price. Kind of makes you want to move to Mono County, huh? All right. And before we get to a forecast of what's to come, a piece of bad news for home buyers: mortgage payments grew for the first time in 5 months. So the cost of a house is not its sticker price, it's really your mortgage payment. And unfortunately, mortgage payments are up 4% from this time a year ago. It's interesting, price growth is up 5% from this time a year ago. So even when you're thinking about how much more expensive homes are today, and you say, oh, they're 5% more expensive in California today, well, the actual mortgage payment is only 4% more expensive. That's nice. And when you even break it down further, unless you're in that top 20% of homes, Homes are really only 2.75% more expensive than this time last year. And when you filter that through the lower mortgage rates we're paying, maybe you're talking about homes being 2% more expensive than they were this time last year in terms of actual monthly mortgage payment. Just something to think about. And for our last chart that we'll be looking at today, I want to look at this chart that compares list price to sale price going all the way back to January 25th, 2015. And something you have to appreciate when looking at this graph is that it is graphing the year-over-year change in price. One way to say it is that this chart is not graphing speed, it's graphing acceleration. So whenever these lines are above 0%, it means prices are going up. And the further away the line is from 0%, the faster prices are climbing. But at every point when these lines are above 0%, that means price increases. Only when the lines fall below 0% does that mean prices are decreasing. So for example, this drop in the blue line and this drop in the red line, that doesn't mean that prices are falling. That means that prices are growing, but less quickly. Only when these lines cross the 0 point does it mean that prices are actually falling. And as you can see, the red line, sales price, only fell below the 0% line once and twice since January 2015. Obviously, the first dip was right when the pandemic hit. Again, that tragic month immediately following Tom Hanks getting COVID in Australia. And this second period of price declines occurred at the tail end of 2022 and through most of 2023. Again, this is just after rates doubled from 3.5% to 7%. And what I want to point out is that this area of price declines followed a long period of list price declines. List price started falling here, the decreases accelerated, the decreases decelerated, list price stayed flat for months, went negative again, and then only here on the chart did list prices begin to go positive again. Let me clean up this doodling. So this represents about a year of list prices falling months before we started to see sale prices falling. And since this period of list price declines, list prices have only been growing or been flat for periods of time. So anyone who says we need a correction has to happen, it's inevitable that a correction will happen. Well, based on this chart, we're not going to see any kind of correction for months and months to come. We need to see maybe a year of list price dropping before sale prices actually drop. Just something you should keep in mind if you're planning to buy a home in California in 2025. Something else you should keep in mind is my 2025 California Homebuyers Guide. It includes the latest conforming loan limits, the latest agency rules about how you have to work with agents in California this year, the latest statewide regulations surrounding homeowners insurance, and a whole lot of other great stuff that you should definitely check out before you start making offers on your California home purchase in 2025. Check it out.